Good morning, Jags. This is Fahad. Today is Thursday, July 9th. Let's get started. Okay, so only one stock on my screen this morning that I'm watching. I discussed this a couple days ago, 3 days ago on Monday, I believe it Tuesday it was maybe, in the chat room. Becton Dickinson symbol BDX. Now, technically, this one is setting up to take out this downtrending resistance. And I think it's only a matter of time. This is an important critical resistance level because it's not only the downtrend resistance, but there's also a lot of VOP congestion in this level between 250 and 255. If it takes out this level, I think it's going to make a swift move up to $270 per share. That's essentially where it was, where it previously stalled out in April and then had a move lower. So I'm looking for a move above 255 and a move up to 270. Now we'll keep an eye on this if this breakout starts to happen today or sometime in the next couple of days. A couple of reasons for that. Number one, if you actually look at this morning's first read, you will see that Barclays is upgrading the stock from neutral, I believe, to overweight, which is equivalent to saying buy, and raising the price target from 266 to 300. So they were already quite bullish even with the neutral rating, but now they're going up to 300. And they basically say that this is all due to Alaris pump challenges now basically getting behind the company. And as a result, they believe there could be revision to the upside coming in the earnings guidance that the company will provide when the second quarter report comes out, basically calling this as an evolving thinking. And as a result, there could be a re-rate opportunity for stock going from here, calling it a window of opportunity essentially. Now, this upgrade from Barclays, while it should have some positive impact, but more importantly, what I discussed in the chat room not too long ago was this view. And in this particular case, we talked about that the company has a rapid antigen COVID-19 test that will be available pretty soon. There was an analyst from within the analyst commentary. We talked about that there was an analyst called Lawrence Beigelson that spoke with someone who runs a central diagnostic lab for a medium health system, who on June 30th received an email from Becton Dickinson diagnostic account representative, and that person indicated that there could be this test coming pretty soon, sometime in July. It should be available. The thing about this test is that the Veritor platform already has 27,000 placements in the United States, and the company has indicated that over 1 million of these antigen tests could be available per week if it is approved. Now consider that it's about $2 million tests per week. That would be the maximum total addressable market size, as well as the capacity that could be available, and at a price tag of $18 million. So when you put this all together, this is an upside to revenue opportunity that could generate as much as, at the highest end, $470 million in revenues per quarter. And this thing was not even in anyone's coverage up until this note came out just a couple days ago, and to this morning we have Barclays upgrade out this morning. So I believe we are still in the beginning phases of an upgrade cycle, especially if this COVID-19 antigen test is going to be coming out to the market. I expect forward revenue expectations will gradually go up. So I expect the chart to start breaking out from this level and gradually stiffly make a move towards new 52-week high with more upgrade cycle to come. So keep an eye on 255. If it takes out 255, look for a move up to 217 short term, and then over time I believe it goes all the way to 290 plus. That's it from me. Chronicle.
Hi Fahad. Two things this morning. Firstly, news just came out about BILI considering a secondary listing in Hong Kong.
Another one.
Company, yeah, they're holding preliminary talks with banks to list about 5 to 10% of their shares. So yeah, another one. Secondly, I'm looking at the latest retail checks from Morgan Stanley, which show traffic for discretionary and luxury goods starting to worsen again, down more than 50% year over year. Clothing retail is faring a bit better and did show a slight improvement to negative 46%. But in the interest of being forward-looking, Morgan Stanley mentions that with major holidays now behind us, apparel should see headwinds again until the virus gets contained. And the current hotspots like California, Texas, Florida, and Arizona, they account for roughly 35% of their retail coverage. Separately, they mentioned their AlphaWise survey shows that 70% of their consumers now cite the outbreak as their top concern, up from 60% in early June. And as such, they're forecasting discretionary retail traffic to remain between down 40 to 50% year over year until a vaccine is widely available. So Fahad, you've been pointing out on Telegram all these daily headlines regarding retail closures and bankruptcies. And now with all these holidays out of the way, as well as Mother's and Father's Day out of the way, I'm thinking even the online sales are going to start to slow from here. And so I think this is a good spot to start hunting for some short setups. In terms of individual stocks, I'm looking for the ones that have already been seeing their revenues decline over the years in a secular fashion, and at the same time, whose revenues are very dependent on holidays and family events. And specifically, I'm looking at Children's Place, symbol PLCE. The stock was briefly mentioned in Jaguar Live on Monday. So first off, this company had already been struggling with decreasing revenues over the last couple of years, with margins having narrowed all the way down to just roughly 5%. And the only bull case left was that they've been building out their online presence. But as I've mentioned, online sales from here will likely slow until maybe Thanksgiving. Also, note that this company makes 50% of its revenue in the South and West. And if we take a look at their financials, 100% of their debt is current. The debt totals about $250,000, which is massively up from just 50 million last year. They do have additional 150 million they can draw, but they haven't really made any announcements about liquidity yet. However, they did say that they are going to close 200 stores this year. Meanwhile, debt to equity has surged higher from 2.5 last year to 6.4 presently. Moreover, over the last 5 years, not including this year, the company did almost $1 billion in buybacks. So that's coming back to bite them given the negative operating cash flow environment. Their dividend yield is 6.3%. So I'm expecting a cut. Here's the crazy thing. Consensus is expecting the company's earnings to flip from negative $1.30 to positive $2.49 within the space of the next 2 quarters. Similarly, revenue is being forecast to increase 66%. Looking at the chart, the stock has been acting weak for about a month now, and notably, it was down a lot yesterday while the Russell and retail stocks were having an up day. So this stock is not just underperforming the S&P or NASDAQ for that matter, but it's also underperforming its peers from both a sector and factor perspective.
Yeah, very interesting. I do want to point out a couple things just to add to your mix over there. Here is from Carl Quintanilla. Here was a Goldman research piece that he quoted this morning. Carl is one of the anchors, well-respected anchors on CNBC. And Goldman Sachs said this morning that states with over 40% of the population have now put reopening on hold. States with another 30% have already reversed part of their reopening. And this chart is basically telling you that how since the middle of June, things have actually gotten far worse in terms of not only rising number of cases, but also in terms of total restrictions being placed on move-abouts of people and such and such. In another note that I also read last night, they talked about I read a note that the total number of cases in the United States, and this is important, breached 60,000 first time yesterday. Yesterday was the highest on their high record in the United States, 61,000 and change total number of cases in a single day. And more importantly, you know, we have talked a lot about the mortality rate being so low. Mortality rate is now also starting to jump. So what was settling around 300, 400 deaths per day has now jumped back to 900 for the last 2 to 3 days. And this could be on its way, total number of deaths per day, to about 1,500 to 2,000, especially if the total number of cases continue to rise. People look at this data, people look at the restrictions that are being put in place in the South, people look at how this thing is spreading, and the clear response continues to be very, very negative around the mall retailers and the restaurants and all airlines and all of those essentially. And that's one of the main reasons why these stocks are acting the way they're acting. So interesting thoughts on PLC. And then the only last thing that I will add to your mix is keep in mind that there was a coverage on this one not too long ago on June 14. Jay actually wrote about this on PLC. It was right over here, Children Place, the specialty retailer, on June 14 in the Week in Research, in which he covered the last earnings report as well as what we are hearing on the street in the short term and what to expect going forward from here. So if you're looking for some more thoughts and some ideas on this one into the background, that would be a good read as well. Good stuff. Jay?
Hey, Fahad. So 2 stocks today. The first one is an update on Helen of Troy. HELE is the ticker.
Yeah, nice breakout, by the way. Great call on this one a couple of days ago in conversation, and now look at this, just a beautiful, steady breakout continues. Go ahead.
Right, so early May, talked about it in Weekend Research after their Q4 numbers. Fast forward to June 30th in conversations, we brought it up again based on positive checks from both Oppenheimer and B of A. Well, this morning, company reported their Q1 numbers, and Chronicle posted the results in today's first read. Big beat on the top and bottom line. Net sales growth was 11.8%. Their health and home segment increased 29%. And what was positive there was, while brick and mortar closures, were obviously evident, you did have retailers that their key retailers like Walmart, Amazon, Target, Home Depot, they remained open. So that's why you're seeing a strong number there. And then the beauty segment surprisingly increased 5%. And this was definitely a positive, considering that you have Ulta, Sephora, who do operate brick and mortar stores. Even though they were closed, the company was still able to show improvement or show positive growth in that segment. And then their online channel net sales increased 33%. One of the items we talked about in conversations was that over the past 5 years, they have increased their online presence. At one point, I think it was running about 6%, and now it's running 24%. So definitely a good thing there. And shares are responding. I think they're up about 7-8% right now.
Yeah, fantastic stuff. So this was originally presented in the Week in Research in May, and then May, right?
Yeah, May 3rd.
May 3rd. And then just a couple of days ago in conversations, we brought it back up again because it was starting to break out with some updated bullish thoughts. And it closed yesterday at 195. It's going to open at 210, 209, 210 this morning. So anybody positioned into this one is going to have a fantastic day. Great stuff. What was the next one?
The other one was Pentair. PNR is the ticker. It's getting a double upgrade this morning from B of A, where they go from underperform to buy. And really it's not surprising, considering that if you do look at the analyst commentary section, there was a positive note last month from Oppenheimer in which they talked about the read-through from Pool Corp, POOL. Basically, Pool Corp provided a business update on May 27th, just talking about the positive trends they were seeing from April into May. And then this morning, B of A, of course, does mention that. They also mentioned positive checks just from Google search. And then in terms of the weather, they comment that a year ago, the Q2 weather was cooler and wetter than average. But now, fast forward to a year later, you have April and May temperatures this year were in line or hotter than historical average, which just, again, benefits the entire pool industry.
Two things real quick on this one. The first one is the pure technical view. So the BOV upgrade is coming at an interesting juncture because the stock was just sitting at its very important VOP support level. So this means that if one wanted to go long, you have an easy way to put a hard stop at 35.50. You put a stop at 35.50, and then basically you look for a bounce from there. The second thing is that I wonder if this is also beneficiary of a strong housing trends that we have seen emerge, particularly with people moving out of urban to suburban areas. The reason being, as you know, Pentair is a big provider of swimming pool equipment, and the swimming pool I have in my backyard, the entire equipment, which cost me $22,000 to put on, that's just the equipment. The whole swimming pool was $120,000, but the equipment alone was $20-some thousand, and it's all Pentair. All the pipes, the heater, the filtration system, every single thing, it's all Pentair. And so if there is a rise in demand for the housing in the suburban areas, as we have been discussing, because of migration that's happening from the big cities, maybe there's reason to believe that Pentair actually will see a little bit pickup in demand as well. Something to keep an eye out if that comes across in your channel checks in the future. Good stuff. Avo?
Looking at MRVL, I think I had mentioned it in one of our previous conversations, although we've done so many of these that I've kind of forgotten what we've been tracking. Options activity yesterday in August strikes, the 40 and 37 calls, which are reflected in open interest today. Sorry, lost my page here. I don't normally like to look at or go after a stock that's breaking out, but there's plenty over. I think technically in any case, in this one, just a couple of notes, recent notes. One was from Bank of America. It was more of an industry note on 5G radio infrastructure, and now they expect the infrastructure semi industry to double to 7 billion by 2022, but this is the 5G sector is expected to double like 48% compounded annual CAGR. So this, I'm not sure what the number is currently, but this includes the processor switching, physical, the core and whatnot, which top beneficiary they see MRVL as being one of the best positions to capture the infrastructure expansion. And then was also now we don't get these Rosenblatt notes. This is just from earlier this week. So Rosenblatt said they think Samsung is about to displace Nokia for 5G radio access network supplier to Verizon. So if in fact this is true, they believe their suppliers, including MRVL and Xilinx, will benefit from the change. So that's what I was looking at.
My recollection from MRVL the past, because it was a point when I was very, very bullish on this company when it was trading around 24, 25. So this was in 2019, and I saw a big wave of orders coming for the company in, for 5G, to build out the 5G network. COVID happened, the stock crashed, forced me out of the trade. It took a little while, but then it started to ramp up again. And so one big thing I will tell you, MRVL, is very simple, because we have covered, there's a lot of notes we have in this one, is that the company makes the 5G base stations. And this is only one of two companies around the world that makes these 5G base stations. And it has a big contract with Samsung, and Samsung is building a big factory down in Texas to get all the infrastructure in place, because the 5G wave is going to last for many, many years. Based on the prospects of the kind of orders that they're expected to get from Samsung, and then hopefully from Apple and others as well, then there was a thought process that came across in 2019 in one of the notes that I was reading, that the forward earnings projections, which was calling for $1.15 in earnings power for the full year EPS, could potentially rise to as much as $3 and change if these 5G base stations take off. That's why I turned very bullish on MRVL at one point, and I owned the common and I had call options and I recommended multiple times. All of this discussion is in historic in 2019 notes that we have had. Now finally the stock is running very, very strong because those 5G base station bull case is actually coming into play. It's going to be interesting to see whether it's going to go to that $3 earnings per share power, because historically this stock is traded about 18 to 20 times PE. And if that happens, you simply do the math, this is a $60 stock. So even at $37 per share, this becomes actually a steal. Naturally, there's going to be pullbacks along the way in this one, but this could over time could be going to $60 per share. So 5G is a big theme, and it's going to continue to positively impact various semis. I'm not surprised that we are seeing upside call buying in MRVL, and I do think it's a great company, and I think it's going to continue to provide the upside. I don't want to chase a tear with the kind of breakout that we had, but any pullbacks, consolidations, and there could be entries in this name. Good stuff. All right, we're going to stop here. Thank you, everybody, for joining, and we will see you in the chat room shortly.